Good morning, options traders. Steve Gans here, and we're going to talk about an Apple earnings trade today. So I happen to be an Apple bull. I'm long some Apple stock. I actually trade covered calls against that stock, but that's not really about this. I just wanted to set the stage for what my historical opinion is on Apple. And I do think they're going to be doing some things with AI, etc. here before too long that's going to be a little bit of a game changer for them to the positive. Again, just my personal opinion here, but I wanted to set the stage as to where my head is normally at on Apple before I dig into some potential earnings trades. So, how do I want to go about this? The first thing I'd like to do is I'd like to come in, take a look at flow, and I want to specifically take a look at what historical flow looks like in Apple over the past, few days since the beginning of this week. So I'm going to use historical flow. I'm going to set this up for looking at it since this last Monday to today. And then I'm going to go ahead, put in my symbol, and I want to see what the recent money, if you will, is doing out there regarding Apple. And, okay, apparently other people aren't as bullish as I am on Apple, so that's interesting. So I now am going to factor that into my trade. Originally, I was looking at a more bullish trade, like buying a call spread or potentially selling a put spread. Now I'm going to mix my opinion of bullish with the market sentiment here, which appears to be a bit more bearish, where people are buying puts. A lot of put buying going on here. Selling of calls, also equally bearish. So I'm going to factor that in now to my game plan. So now that I've decided, okay, I probably want something a little more neutral once I mix the market's opinion with my opinion, I'm going to come back to the Optimize tab, and I'll put in Apple, and I'm going to put in that I am neutral. And we'll see that there's a host of different potential trades that I might consider here. Oh, and also, because it's an earnings trade, I want to go to the expiration that's going to be taking place here tomorrow. Now, in earnings, I'm sure most of you already probably know this, but the reason that we go to the earliest expiration is because volatility is much, much higher there. The volatility in the options that are going to expire tomorrow, because there's this big binary event of Apple earnings after the close tonight, those options are going to have the most premium built into them because there's more fear and greed based around this earnings event than there will be if we go out to the 10th, the 17th, the 24th, etc. So that's why when you're doing an earnings trade where you're going to be selling premium, you want to get the most you possibly can for that premium in most cases. So that's why you're going to be looking to sell the options that are going to be the highest premium or the highest volatility. And again, that's going to be tomorrow's expiration. So when I select this, you can see I have all these different potential options. Now, I also like this slider here. This tells me, do I want the highest % chance of having a winning trade? In which case, I can come all the way out here, and this will model trades for me that are very wide. In this case, this is a condor where my strikes are at 185 and 155. That's a pretty darn wide set of break-evens here. However, my profitability, if I hit my target, my profit is going to be $9, and I'm risking $240 to potentially make that $9 profit. Now, there's a high % chance, a 93% chance, that I will, in fact, have a winning trade there. But that winning trade is at what I would call an inappropriate risk-reward ratio. The other thing I need to look at here, let me just take this back to a normal setting, a mid-setting. The other thing I want to look at here is the amount of capital that I would have to tie up on each one of these trades. So with this iron condor, I have a max risk of $268. Or excuse me, I said condor. With this iron butterfly, I have a maximum risk of $268. With this iron condor, I have a max risk of $405. With a short straddle, now this is running naked options. This is going to tie up a lot more money to do short strikes and not have any longs for protection. These are essentially naked options that I would be running in those two. So I'm really not interested in doing those. Now there's also another way I can filter these out. I can say, you know what? I only have a budget of $500 that I'm willing to put into this trade. An OptionStrat will eliminate the trades that won't fit my criteria. So now that I've narrowed this whole thing down, I think I'm going to focus on doing a condor. And the reason I like this is it's got a little bit wider break-evens, and I'm actually going to widen them out even further, as we'll see in a minute. So I'm going to open this one in the builder. Now, the next step that I like to do is I like to come in and take a look at a chart of Apple. So here's a chart of Apple. If I look at some technical analysis here, around earnings, all bets are off. But under normal circumstances, I would look for a top at around 178, somewhere in that range. If Apple were to adhere to, this prior resistance, which again, around earnings, it may not at all. But that is a point where this used to be support, 180 used to be support, now it's become resistance. So there is some resistance there to the market going above that 179, 180 range. So that's where I'm actually going to put my short call. Now, my short put, there's been some support around 164. So I'm going to look at 164 to about 179. So we'll come back here. I'll drop this down to 164. Well, there's not a 164, so I'll go 165. And then I think I said a 179. And there's not a 179 either, so I'll do a 180. We can see here there's more trading and more strikes happening at 180. It's more liquid, which I like to see. And then I need to decide on this, how much risk do I want in this trade? Where do I want my wings, in other words? Right now, my max loss is way too high. I don't want that much max loss, so I need to tighten this up. So I'm going to tighten this up to $5 wings, okay? Now, after I do that, I'm just going to refresh my screen here and see what this looks like, and I'm going to shrink this in a little bit. So that's what this particular trade looks like. So my max loss is going to be 370. If I expire within this tent, particularly between my short strikes of 165 and 180, that's a 15-point wide range. Pretty wide range here. That's almost 10% range on this. I've got a 67% chance of profit. And I'm taking in a net credit of 130. That looks reasonable to me. Not great, but reasonable. And I can see here, this is, if I enter this trade here today, this is what this P&L diagram is going to look like. So ultimately, it really doesn't make any difference what it looks like today. It's going to be what it looks like tomorrow. And again, tomorrow's one day away. Tomorrow morning, it's going to look something like this. By tomorrow evening, at expiration, we're going to be something like this. So there's not going to be much time to adjust this trade. There's probably not going to be a possibility really of adjusting this trade. So I have to think about that up front too. It's, am I okay with this general game plan? This setup gives me, again, nice wide range here, but my loss is considerably higher than my profit. And I am going to go ahead and just lock down this trade. This is a paper trade. Want to stress that. If I had a more bullish opinion, I could also do things like I could skew this. I could make my upside, I could have less risk to my upside. If I were to think, for example, that if Apple were to do anything, it's likely to blow out the top, I could do something like this and I could skew this. But again, my goal right now, I'm just going to keep this as a simple condor, just like this. Going to go ahead, save that trade. And I'm going to put this into the compare and contrast series. Excuse me. I'm going to put this into the start to finish series. I am going to save the trade. And then I'm going to copy the link. I'm going to put the link in the description down below so that everybody has access to it. You can click on this link. It will automatically open up in OptionStrat, whether you're a current subscriber or not. This is a way for you to experiment with OptionStrat if you're not a current subscriber. And from there, I appreciate everyone's attention. If you would, give me a like, a subscribe, any comments. I do try to look at comments a couple times a week as well. So that's it for now. Thank you so much, everyone. Take care.